Hi there, I'm Irk, and this is my channel, Get Irked. In this episode, is it time to double down on DraftKings, or is this gambling stock about to crap out? In this episode of Speculating In, we're going to be taking a look at DraftKings, ticker symbol DKNG. DraftKings specializes in online betting, both in terms of sports betting, but also in iGaming opportunities like casino games. Thanks to the pandemic lockdown and everyone getting stimulus checks, stocks like DraftKings have become extremely popular as a way to be able to entertain yourself by betting on sports teams and pretty much anything else out there, including regular casino games. And with the individual states legalizing gambling on a regular basis, it would seem like there's nothing but sunny skies ahead for this stock. So what's the problem? What initially seemed to be a really big total addressable market, or TAM, that was increasing in size while each state legalized gambling has shrunk as there are more competitors on the scene that are going against DraftKings. Instead of having a protective moat around DraftKings like initially was thought, it turns out it doesn't take a whole lot to start a gambling website. So there's a lot of competition at DraftKings, and this is one of the reasons I'm looking at this stock as a speculative play and not an investment in play. From here, we're going to take a look at the fundamentals of DraftKings, and I'm going to give you a buying plan of what I would do if I didn't already hold a position in DraftKings, and then I'll go over my own position, which started at much higher levels than where we are today. You can see that this $11.6 billion stock is still not profitable, with an earnings per share of negative $3.62 a share. DraftKings and its competitors are having to spend a significant amount of money to attain users. They're offering a lot of different discounts as well as opportunities for free money, and this causes the stocks to lose money as they try to build in size. In fact, although over the long term DraftKings and many iGaming stocks are likely going to be profitable, right now is not a good time for the space because there's so much competition. However, that being said, DraftKings has sold off significantly since its high, and you can see that it has a one-year target estimate of $60.93. So although by many metrics, including Yahoo Finance, DraftKings is considered overvalued with a one-year target estimate that's more than double where it currently is, it makes it a very tempting speculative investment to get started in. From here, let's take a look at DraftKings on a chart and develop a buying plan. So let's start by drawing a Fibonacci retracement from the pandemic low to its all-time high and see if we can find levels where we'd like to add to the stock. When you take a look at DraftKings all-time high here at $74.38, you can see that this Fibonacci retracement seems to be relatively accurate, as it does provide support at different levels on the way down. In fact, it's sold off so much you can see it's approaching the 78.6% retracement down here at $24.25, with a recent low here on this day down at $25.80. This represents a sell-off of nearly 66% from its high to its recent low, so now might actually be a good time to start a position. If you're a regular viewer of my channel, you know that I typically like to start with a 50% allocation and then save 50% to make 10% buys, 5 individual buys on the way down as a stock sells off. And because DraftKings has already sold off so significantly, I think a 50% allocation as a starting point is perfectly reasonable. However, we are going to keep in mind its low of $10.60 during the pandemic, as that will be the low target that we have for this stock. After our first buy around $25.80, or maybe a little bit over $26, you can look over the past and you can see there's quite a bit of price action here around $23.50, which might make for a good second buy. However, if you were feeling more conservative, you might actually look at this low here at $21.15 and then move on from there. As we move lower, you can see that there's additional support on this day where it pulled back here down to $17.60, which makes a good next buy, followed by this pull down maybe here around $15.55. After that, I'd probably look at this day for my fourth buy at $13.50, followed by $10.60, which was my low. However, since I'm usually more aggressive, you can see that there's a little bit of price action above this low. I would likely use this day here at $10.92 as my fifth and final buy. Without seeing a black swan event or something that actually happens with DraftKings fundamentals that would invalidate validate our thesis to begin with, I honestly don't think we'll see it come down to $11. That is quite a bit of a sell-off even from its current levels. That being said, I always plan for the worst case scenario, so I'd prefer to have some cash on the sidelines and not be able to achieve a full allocation than being all in and having it sell off lower with no money for me to put to work. So this plan is the one I would follow. I made my first buy in DraftKings on January 29th of 2021 at $52.97 a share. After that, I let DraftKings run for a little bit and made my second buy on May 3rd of 2021 at $57.03, which raised my per share cost to $55 per share. Since DraftKings had made a new all-time high up here at $74.38, I decided that I had no problem raising my cost basis as I thought there would be a lot of support and that DraftKings would make new all-time highs. As you can see, I was very wrong. Exactly a week later, I made my third buy after DraftKings really sold off at $44.50, which lowered my per share cost to $51.50. And from here, I decided to let it run for a little bit. On September 7th, I decided to take some profits when it looked like DraftKings was peaking, and I made a sell at $64.08, which lowered my per share cost down to $45.21. And it turned out this was the right decision to make, as DraftKings pulled back significantly. Since DraftKings had found support around the $40 level in the past, I decided to make that my next buy target, so on November 11th, I made a buy at $40.68, which lowered my per share cost down to $43.70. And it was after this point when the entire iGaming space really got hit. I made my most recent buy on December 2nd at $31.05, which lowered my per share cost to $40.54, a reduction of 23.47% from my first buy near $53 a share. From here, I am going to continue to be pretty conservative about when I make my buys. I think DraftKings could sell off quite a lot, and although I don't think it could get down to $10.60, I don't want to be too aggressive and then have it sell off significantly from here. My next buy is going to be around $20, and then we'll continue following it on its way down from there. The upside in DraftKings from here is completely reliant on how many states legalize gambling and whether or not there's more consolidation in the space. DraftKings is definitely one of the stronger names in the space, but the big question is, what's the valuation? How much upside is there from here? For me, given how much DraftKings is sold off and how much upside potential it could have, it makes a really good speculative investment. I won't be including it in my investments in play portfolio where there are much more significant allocations, but I do want to keep my eye on it and have my hand in it over time. Thank you for watching. Please hit like and subscribe, and I'll see you in the next video.